Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to follow up on some of the things I was talking about in yesterday's MTPredictor training webinar, and that was the importance of keeping your losses small. I discussed that any successful trading approach is not about avoiding losses, it's about keeping them small. And as the webinar was unfolding, we were looking at this particular trade setup here that unfolded at 10:51 New York time. We looked at this and I placed the analysis on and I said, well, we have our position sizing which keeps our initial risk small under control. All we know is if this market gets stopped out, it would be a -1 hour loss, or if it actually reached the target, it would be a 5-hour profit. And that's all we can control in our trading, our initial risks and our trade placement. As you can see, this trade was actually stopped out, and we looked at this as it was happening in the webinar. So this would have been a -1 hour loss. In other words, it would have been a losing trade. But I just want to follow up for the rest of the day and show you what happened for the rest of the day, to show you why it's so important keeping the losses small and then having profits that are much larger than the losses. And this is what makes money over time. So let's look at the rest of the day. So we already know that there was one losing trade on the ES 3-minute chart there yesterday. Our STF is red, as well as our large degree trend on our higher time frame DPs. If I just go to our 15-minute chart, I'll show you that. Here's our 15-minute chart, and what we were looking at was back to a last pivot swing low here, and we had our DP on, and we were saying that our large degree trend was down into that 15-minute DP support zone. So we hadn't reached it on our higher time frame DPs. You can see there it is right the way down there, and our STF was also red as well. So large degree trend was down. That means we'd be looking for sell setup, so that's why we looked at that particular setup there. So in other words, these buy setups here a bit later in the day would have been avoided because the trend was down. So on the ES we'd have had our one losing trade there. Let's have a look at the YM. There weren't actually any sell setups on the YM yesterday at all. The only ones were our buy setups, and as I've already discussed, large degree trend was down, STF is red, therefore you'd be avoiding the buy setups. So far, only one losing trade over the ES and YM. Let's go to the NQ, because as you know, I always suggest that you follow all 3 or 4 if you want to include the Russell Index of the USE Minis. And it's important because, as you'll see in a minute, just because there were no setups on the ES and the YM doesn't mean to say that there weren't on the NQ. Here was our first trade setup. If I zoom in a little bit, here was our first trade setup the same time as the ES. So you wouldn't take the both of them because that would be doubling up on your initial risk. So that would have been taken in our ES position. Again, largely trend is down, so we'll be avoiding our buy setups and looking for sell setups. So here a TS1 sell setup came in, right mouse click, place the analysis on. Again, this is why the position sizing is so important, because it keeps your initial risk constant. Even if you're having one trade on the ES, another trade on the NQ, it still risks less than the same percentage on your current portfolio. In this example, we're risking less than 2% on a sample $20,000 account. This trade went down to the first profit target because the STF down here is what we call weak, in other words less than our grey bands, would come out at our first target, and as you can see that would have produced a profit of twice the initial risk, in other words a 2-hour profit. This is why it's important having profits larger than the losses, because you can see instantly that this profit here has more than made up for the losing trade earlier and actually put you in profit overall. So a -1 hour loss to start with, a +2 hour profit here puts you up 1 hour profit at this particular point in time. Let's clear this off. We then had another trade set up in here. This was at 14:15 New York time. It's actually replaced it with a history triangle. The reason it's done that is because the pivots would have changed at the time, because what was the wave C at the time, which is this little swing up here, was very, very short, so our pivots would have been recalculated after the market moved a bit lower. But we don't want to hide anything with the software. It's unfair that we remove setups and then just forget about them. If this happens, which it doesn't very often, but if it does, we replace that with a history triangle telling you that at that point in time there would have been a setup at that time in live market trading, therefore you know it would have been there. So we can go back, hover over that bar, place our analysis on, and we could have seen what the setup would have been at the time. And there you can see what the swings would have been. It would have been A, B, C, a very, very short wave C, but nevertheless an ABC correction into our TS3 sell setup. Again, the position sizing takes care of the number of contracts, again to keep your initial risk small under control. This trade then went down to our first target. STF again is still weak, therefore you look to come out of the profit target, and this time it would have made a 4.7R, or almost 5 times greater than initial risk. And this is why position sizing is so important, and having profits much larger than the losses. So overall, what would the day have been? Well, as we've seen, we'd have had one losing trade on the ES, then another profit on the Nasdaq here, so plus 2R, so that would be plus 1R profit overall. Another trade in here, plus 4.7R profit in there. So overall, 3 trades, 2 profits and 1 loss, so that's good. But the profit would have been approximately 5.7, or between 5.5 and 6 times the initial risk. That's the important thing, that the profits are much larger than the initial risks. So I just wanted to go through this today just to follow up, particularly as I was looking at this losing trade setup in our live webinar. So I just wanted to show that even though that loss came in earlier in the day, that loss was taken and the initial risk was, or the loss was kept small. So later in the day we then had 2 more profitable trades in the NQ, but because their profits were much larger than our losses, that made money overall. So overall it was a very good day for MTPredictor on the USE minis, which as we can see over the ES, YM and NQ would have been a plus 5.7R profit. I haven't looked at the Russell Index, but if you wanted to look at this, again STF is red. There would have been a couple of trades here. The first one would have been off this bar here, which would have been stopped out. The next one would have been another trade, short trade in here. Now whether you'd have held it right into close, if you had have done it, would be just a small R profit, or more than likely you might have started to trail your stop a bit closer to the market as it spiked down here with a high volume VSA bar. You can see there's a high volume VSA bar coming in here. You might have protected your trade a little bit more there, but nevertheless it might have been break even to a small profit on the Russell Index. So on the ES, YM and in particular the NQ, it was a good profitable day for MTPredictor yesterday. So I hope you've enjoyed this video, and hopefully you've seen how it's important to keep your losses small and your profits large, and that's what MTPredictor is designed to do.